Right, everyone, we're outside the Bank of England where the UK Central Bank has signaled they're going to start cutting interest rates. Now, I'm looking to sell the pound and profit from the currency going down in value. And in this video, I'll be explaining to you guys why hedge funds, prop firms, investment banks are all betting on the weaker currency right now because of something called the overnight carry trade. And once you understand this fundamental reason which causes currencies to go up or down in value, it will really help you with your education, guys, okay? Listen, enjoy the video. Come into the Telegram channel where I'm teaching this to thousands of members. It's really helping people learn how to invest in currencies the professional way, and like, comment, and subscribe. So let's see why the Bank of England should cause the currency to go down in value. Right, everyone, so we're going to talk about in this video, why is the British pound expected to go down in value? You see this Bloomberg article talking about the pound slipping to the lowest in 2 weeks on Bank of England interest rate cuts. So we're going to be talking about why interest rates really do drive the currency markets and why we're likely to see the pound weaken, because the markets need to fall in line with what the central banks are saying, that the central bank's probably going to cut interest rates quicker than the markets are expecting, okay? And this is really important because when the central banks tell the markets, listen, you guys need to fall in line where we're telling you we're going to cut interest rates, you're going to see moves in the currency markets, all right? So fundamentally, why is the Bank of England cutting interest rates, and why is the pound been going down against the US dollar, against the New Zealand dollar? Well, inflation in the UK is on its way down. So if we look at the UK economy, we can see in our spreadsheet the performance of the UK economy and how inflation is falling towards their 2% target. So inflation in January was 4%, it's now gone down to 3.2%. Inflation, core inflation has gone from 5.1 down to 4.2. Now this is very important, and we use this spreadsheet to analyze the UK economy. So inflation is on its way down, which is a positive sign. Inflation expectations over the next 2 years and 10 years are anchored around the central bank's 2% target. So the central bank is saying to the markets, listen, inflation's on its way down. We forecast it to get to our 2% target. And the latest forecasts literally tell you this in their publication. It says CPI inflation is expected to be at the end of this year at 2%. Right? Now this is really good for us as currency traders because we know interest rates drive the markets, all right? And the fundamental reason behind this is because if you can understand the overnight carry trade and how professional traders are using this to get into the currency markets, you can make some good profits. And I'll show you why I'm looking at pound New Zealand dollar as a really good trade because of the interest rate difference between New Zealand and the UK, okay? So the Bank of England is telling you they're going to cut interest rates. They're telling the markets they need to price in these interest rate cuts, and that should cause the currency to weaken, okay? And the central bank is telling you, the investor, to look out for some important data, and they're telling you that they're going to be looking out for wage growth data and employment numbers. You can see it said it in the report just over here. And when you hear the central bank tell you what they're looking at, this is key, okay? So they're saying we're looking at CPI inflation and wages, and I'm going to break down the two so you can fundamentally understand why this is important. So UK inflation is on its way down. We can see when we do this spreadsheet, we look at interest rate expectations. This is how we can understand through each meeting where the markets are pricing interest rates. And we can see that by the end of the year, rates are going to go from 5.25% down to 5%. And by around this time next year, they're going to be at 4.37%. Okay, now this is very, very important where interest rates are expected to go, okay? And if you look at, for an example, countries like New Zealand, where interest rates are 5.5%, but look at the end of the year, they're expected to still be in the range of 5.25% and 5.5%. So no rate cuts are coming in New Zealand by the end of this year. Now this is really important because of the overnight carry trades. If you understand the currency markets and why they move on interest rate expectations, this will give you a good understanding of how you can get some good trades in the market. So look, the pound's interest rate is at 5.25%. New Zealand's interest rate's at 5.5%. If you can understand that when you're trading one currency against another currency, the overnight carry trade is vitally important, because when you're holding a trade open in your trading account, that means that the broker is either going to be crediting money into your trading account every day or taking money out of your trading account every day for every day you hold that trade open, okay? You may not even be aware of this, but this is really important and is vitally key, okay? So look, UK interest rate 5.25%, New Zealand 5.5%. Now this is a currency trade I am going to take in the markets with the members, and this is important. why we're understanding the fundamentals behind this position. If I'm selling the New Zealand dollar to buy the British pound, remember, you have to pay 5.5% interest on the New Zealand dollars you sell in exchange to buy the Great British Pound. Because remember, when you're trading a currency pair, you have to sell one currency to buy the other currency in that exchange rate, right? The difference is 0.25% in New Zealand's favor, which basically means New Zealand pays a higher rate of interest than the UK. So if I sell the New Zealand dollar to buy the Great British Pound, I'm losing 0.25% over 365 days. Now, if you're taking trades in the currency markets, and let's look at lot positions, you may not realize just how much this is costing you, okay? So let's say you're trading one lot, okay? You could be losing, for an example, 72 cents every single day out of your trading account. You hold that trade open. Might not seem a lot, but look at it when you're looking at the investment bank community, right? Or hedge funds or investment firms, right? Let's say you're taking big trades, big lot positions. You're a $1 billion fund. You could be losing $7,000 a day on that trade if you take that position and you sell the New Zealand dollar and you buy the Great British Pound because of the interest rate difference between the two countries. However, if you sell the Great British Pound and you buy the New Zealand dollar, you're paying 5.25% interest on the pounds that you sell in exchange for the New Zealand dollar, but you're receiving 5.5%. So you could be making $7,000 a day when you hold that trade open. Okay, this is really important in the currency markets, because if the central bank does cut rates as the implied rate that the markets are expecting, and let's say rates by March next year go down to 4.37% in the UK, okay, which would be the range between 4.5% to 4.75%. Look at the difference. The interest rate difference would actually now go up to 0.5% in New Zealand's favor. So now let's look at how much that would mean in the carry trade. That would mean investment banks will go from making $7,000 a day to now making $28,000 a day. So that would push the exchange rate into the New Zealand dollar's favor, because who doesn't want to take that trade? Who doesn't want to earn free interest from a currency pair every day you hold that trade open? All right. And this is exactly why the markets are saying the pound slipping to the weakest on the interest rate cuts. Okay. So if you can understand that, we can get into a really good trade and we can profit from the moves, okay? Now, the central bank's saying to you, they're looking at, what did I just show you? CPI numbers and wage numbers, okay? So CPI obviously is inflation. So when the UK inflation numbers come out next week, if this number goes down to 3% and the core inflation goes down to 4%, okay, it's just getting closer to the central bank's target. And that would mean the markets really do ramp up these rate cut bets. And you already know what happens when you're ramping up interest rate cuts by the UK. It just means the difference in interest rates between the UK and New Zealand will move wider in the New Zealand dollar's favor, because you can just earn more and more interest, free interest into your trading account. So let's say the pound New Zealand dollar then slides more than 2%. Let's say it now goes down by like 5%. Well, now imagine you've made a 5% return on your money plus the interest you're getting paid into your trading account. Now you're looking at a really good trade in the markets where you could be profiting. For an example, if you look at the interest rate difference that we just spoke about, you could be making now you're making 0.5% on the interest rate difference, and you're making 5%. So you're making 5.5% on a big fund, for an example. So what we need to understand is when we're trying to trade the currency markets, all we need to know is, where is the smart money putting their money? They're obviously going to sell the pound to buy the New Zealand dollar and profit from this interest rate difference. So many people do not even understand the overnight carry. They have no idea that this is what really drives investors, okay? And in some of my private channels, I literally just shared an article today explaining how all the investment banks are looking at the overnight carry at this moment in time as one of their favorite strategies. This is a whole article talking about the overnight carry trade, okay? And this is really important, because if you can fundamentally understand what is pushing currency markets, look, carry trades are generating blockbuster profits, driven largely by the strength in the dollar, okay? Now, this is an article talking about why the dollar's been getting stronger, because the markets have been pushing back on interest rate cut expectations in the US, which would just mean the US will have higher interest rates than the UK, than Europe, which explains why the dollar's strong against the pound. Okay, so if you're trading the markets, guys, this is what we fundamentally need to understand, all right? Now, they also said, the Bank of England, inflation and wage data, Why is wage data so important for a central bank? Well, all you need to understand is that if the central bank's interest rate increases in the UK after COVID has worked, well, obviously people cut back on spending because mortgages, credit cards, car loans, student debt payments all go up. People can't spend as much. Businesses earn less profits. What are they going to do? They're going to let go of workers. So you're going to see a higher unemployment rate. And when you see a higher unemployment rate, there's more people seeking a job. So what they do is, when there's more people looking for jobs and businesses have let go of workers, now they have room to cut prices because they're not paying as much wages to their current employers because they've got less people on their books. And when they hire new people, because there's more people looking for work, there's less competition between businesses. So they don't have to basically outbid each other and offer better salaries. So they're saving even more money. And that gives them room to cut prices even more and get inflation to 2%. That's why the central bank says they're watching wages. Because if wages are going down, that's an indication to the central bank that these companies can lower prices. So if you see wages coming down and you see inflation coming down, you know straight away interest rate cuts are coming. And now you understand the overnight carry trade, which literally drives the currency markets. It's the number one reason. I've got a whole nother video on my YouTube talking about the Japanese yen, why it lost over 40% of its value over the last 2 years, explaining this in even more detail, but go have a look. So this is why we're selling the pound against the New Zealand dollar. Hopefully this trade plays out beautifully as long as the markets don't expect rate cuts in New Zealand. As we can clearly see from that chart I just showed you over here, the markets currently are not betting on any interest rate cuts in New Zealand, okay? We did get some data that came out today in New Zealand which showed that inflation expectations are falling, which could mean that the central bank could cut interest rates maybe later on in the year. But if I show you this article across the bottom, you can see, for an example, these economists are not forecasting any cuts until next year. So there you go, guys. We got a beautiful trade setup right now. Interest rates drive markets. We have to look at inflation, where are wages going, what are the market's expectations for interest rates, and this is the key. So if you don't have these spreadsheets that show you where interest rates are going, you can't anticipate the overnight carry, and you're probably going to get caught on the wrong side. So if you're interested in learning more about currency trading, drop me a message. Come and see what I'm doing with 1,000 members that I've got, and we're trading all over the world. What we're doing is learning fundamentals, guys. This is fucking key. Really important. All right, guys, so that explains pound against the New Zealand dollar, the overnight carry trade. Let me know, guys, what have you been using for your currency trades? Have you ever even understood the overnight carry trade? Did you know how to build spreadsheets and look at the implied rate of interest rates to know where the currency markets are going to go? I'd like to hear some of your comments in the video, guys. Let me know. And if you're not ever been educated on this, drop me a message, come get involved. Got Forex courses educating you on this in detail, but it's really, really important.
Okay, cool.